Tip of the day. Has anyone told you that life policies comes in different term? One is term policies, which is temporary, and the other one is whole life policies. The benefits of a whole life policy outweighs the other one. How you saying? You get guaranteed protection for your life. Plus, you have tax deferred growth. Plus, your money is growing on a compound basis inside the policy, your own premiums. What does all this translate to you? I'll tell you. But there are two different types of whole lives. One whole life is, you can say, regular one, which gives you your growth dividend forms you get to grow your money inside of it. It goes, doesn't matter whatever the market does, you get at least around 6% or so. Depending on each company, it varies that your money is growing at around 6%. Now, the other one is has universal life. Universal life, the money that's growing inside of it is growing on basically in the market. Yes, it's just more like mutual funds. You're growing your money and you're growing your money inside the life insurance policy. Money on the outside, the mutual funds, will be growing on a tax basis. So whatever money that you gain will be taxed. But in the wealth account in Universal Life, that money does not get taxed at all. So you have a tax-free growth on your money. Very important thing. For example, if you have $100,000 going on the outside in the market, you're going to be paying taxes on the 100,000 if you have growth on it. 50% of it's going to be taxed. So you're losing about 25,000 or more just on taxes. Whereas if you have it in the permanent insurance, universal life wealth account, what is the amount of money that you're going to be taxed on? Zero. Yes, zero. Because if it's in there, it's tax protected. So you have no taxes affecting your growth on your money, and you get to use that money yourself. The other benefits for you is creditor protected. So if anybody sues you, they can't touch this money inside of it. Whereas on the outside in mutual funds, somebody sues you, they can take all your money. Another benefit. The other one is basically is the money that you have inside of it, your premiums growing on a compounding basis, gives you another option. If your money is growing at an accelerated rate, you can have free insurance for the rest of your life. And you don't have to pay. And both of the permanent insurances. Whereas term insurance, you have to pay every time you could do, and you have to get requalified for insurance. Here, you only qualify once and you cover for the rest of your life. Main benefits. The other one is the money that's going on the inside of it is yours. So when you take the money out, and the thing is when you retire, it doesn't affect your CPP or your old age. Whereas the money on the outside will. So think about it. You get your collected CPP, your old age, plus you can draw another 5 to 6,000 that doesn't affect it, and you can live the lifestyle you want. Versus on the outside, you can't do that. Because if you draw too much money out, you get decreased and your CPP and old age gets decreased. What do you rather prefer? More money or less? That's up to you. But the main other thing is the amount of money that you have inside of this account. No one else knows what's in it. No one else knows what amount of money you have inside of it. Only you. You can have $1 million, $2 million, $5 million inside of it. Nobody else knows how much money you have. Because it's creditor protected. Even if you go bankrupt or something, they can't touch this money at all. It's strictly your money. Benefits for you. You can use these policies as collateral purposes too. You can even withdraw the money whenever you want. If you want to buy or purchase a house, use it for maybe your retirement. You want to use it to purchase a vehicle, go traveling. It's yours. It's like a bank account. You got a lot of varieties and different types of things you can use this account. But the main ones is you have to remember its premiums are growing on a tax-free basis. Your money.